So today, Friday, the job claims came in from the United States. Wow, what a number. Expected 170,000 and over 300,000. What does that mean? Well, the US is growing with around about 2%, and this indicates that the economy is still pretty strong. And it looks very much like that there could be still a soft landing. And for this reason, we have to check the rate hikes. Before we do this, the heat map, well, mixed picture, I would say. On the bond side, 2 years, 5, 10 years, 4, 7, spread only 0.3%. Not so good. Money is very expensive in the United States, and the same obviously in Europe. Interesting underneath here, we have some new correlation between gold price and US dollar index. As you know, it's vice versa. And here what you can see, gold is really also suffering as the dollar index goes up. This is obviously what the situation. So let's check the rate hikes after the job claims today. That's good. Still 70% believes no increase in rate hikes. Let's check the last meeting, which will take place in December 13. And here still, well, around about 58%. So in other words, you can choose what you want, a strong economy with soft landing or a weakening job market. In the moment, the job market is still okay. Well, good, I would say, and but inflation comes down. This is very important, all the data which came in recently. So the market participants believe no rate hike increase. That would be great. Here we come to a Bitcoin, 27,912 on a daily base. Well, we stay in a range between 25 and 30 for quite a while, as you can see here. And but it's stable. We have not a lot of volatility. Well, let's check the market capitalization. We went a little bit up. We're still on 12 with $543 billion. Halving clock, 193 days, and still it's going to take place April 17. And here we come to the news. Bitcoin miners, Marathon, Rio, CleanSpark increased BTC output in September. Well, their business is really running. And it's amazing. Marathon itself just increased production by 245%, which is more or less the same with all the other miner companies as well. So also they need this. They need to generate money because they have to invest into the halving coming in April. What does that mean? They get a 50% reward reduction, and they have to increase in hardware in order to be profitable in the future. But it's going well so far. Okay, so Friday today, it was a good week for Bitcoin, close to $28,000. A lot of people said, well, we will go under 25,000. We were close to the 25,000. But it didn't happen. This is always, you know, what people think and what's going to happen is sometimes not the same. So anyway, it was a good week. So let's check out the technical data. Okay, and we start with something new. Fear and Greed Index Bitcoin, something we didn't have and which is not available so far on the market because there is a Fear and Greed Index for crypto, but here we were working the last couple of months on a new indicator based on our own models. As you guys know, we have a lot of models regarding the future evolution for the Bitcoin, and for this reason we decided to have our own sentiment indicator. And our own sentiment indicator is much less good than the official. The official at the moment is probably something like 50%. Our indicator says, no, it's only 23%, because it's based on our own data. So maybe it's more valid. Just go on the website. It will be updated every day. And you see the sentiment evolution for the first time just for Bitcoin. Bitcoin a yearly base, well, stable, as I just said, in the range between 25 and 30. Here, something we developed recently. money supply, Bitcoin, gold Bitcoin, and Nasdaq Bitcoin. And these data are only updated on a monthly basis. Nothing happened because we get all this data from the Federal Reserve. The heat map today, more green than red. Market capitalization over 50% for Bitcoin. Liquidations, not really heavy liquidations. On the spot side, we have a decline in loaded addresses. Under 49, we were close to 50. Important still is that only 157,000 wallets control 13 million Bitcoin, which is about 66% of the total market, although there are around about 49 million wallets. So it's still very much a very, very elite controlled market. I very often said it. Balance of exchanges, well, we have a downturn since May 20, last halving, which is bullish for the Bitcoin because over 75% of the Bitcoin are not moving. They're more or less in cold wallets. Hash rate is constantly going up, as we just saw. The miners work very hard to generate Bitcoin. Competition is very strong. Price is underneath, and that means, usually because of history, price will follow hash rate and will go up. And now we come to our new miner Bitcoin cost model, and this is very interesting. October 5, okay, in the moment we're over break even with $1,000 profit. Electricity cost $14,850, hardware $11,870. Total cost today $26,729, so roughly 1,000 less than the Bitcoin price. And as you can see on history here, going back to the last halving in May 20, with the new bull run, we will make a lot of money, and I often talked about it. We have also the miner index on our website. Go on the website, you can check it. And they will make a lot of money, and the stock prices will go up. In the moment, we're not so much up, obviously, on the level of a Bitcoin, but there is a huge factor as the new bull run will start. Google trend, slight upturn, volume still too low. And now we come to our trend following indicators, and we start on the long run. Here what we see is very interesting because when you look into the middle graph, the MACD, all the time before the last bull run, controlling line, which is the blue one, the MACD, the orange, were over the zero line and was very flat, and then the breakout came. But this time we are again flat but under, and from the technical knowledge about these indicators, that shows that the breakout could be much stronger than the last time. Important is also the RSI. Relative strength index is on 50%, so that shows the market is in a very healthy situation. We look at the same indicators on a short term, and here we see that the Bollinger Bands are quite narrow. We are above the middle line. We had this bullish crossover in August. Since then, price goes up, as I just said earlier. A lot of people thought it's going under 25. No, it's close to 28. So this looks bullish. And the RSI is here on about 56, a little bit above the middle line, but definitely not overbought. Short term says next 2 days, meaning the weekend. Usually there's not so much trade going on. That we will stay on this level. Well, our interactive price forecast model, well, the box is the way we have to go. We are $4,000 too low according to the model. Target still is about 41,000 to the halving. Second model says more or less the same. Wyckoff, we finalized phase A, B, C, D. And well, we are waiting for phase E, but this will only happen as volume comes in. Fibonacci retracement, a very important indicator. We stay stable for a long time in the 50% retracement zone with a little bit sort of upturn towards the 68.1, which is the golden pocket. This is what we need to see a new bull run. 50 to 200. We had with DAF cross to the downside. We have to understand that this is not unusual. Before the last bull run, it was pretty similar, that you have DAF crosses and golden crosses, vice versa, and still then it happened. We come to the ribbons with 7 indicators, 5 days, 10 days, 20 days, 50 days, 100 days, 124, 200 days, the EMIs. And here what we have to see is that the price is above all these EMIs. So this means for short-term holders, it's better to sell now. If you're a long-term holder, this is not so important. But it's a very strong indicator that we are quite in a good situation at the moment. Finally, we come to the logarithm regression model. Well, another 6 months we have to go to the halving. We are in the end of the existing cycle, which goes from 20 to 24. Well, as you can see, it's always the same. In the middle of a cycle, you have a peak, and then you have a bottom. It's also interactive. You can go on the website, you can play around, and you can, because it's a logarithm model, you can also go into the future. So it was a good week, and I think it's going to be quite calm on the weekend, like it's always like this on the weekend. There's not much trade going on. And we will see what next week is going to happen. Not really important data will come in, close to 28,000. So it looks like that we stay on this level. Our prediction for the halving has not changed. It's still in the region of between $40,000 and $45,000. Have a good weekend. Thanks and bye-bye.